All right. Okay. Sorry, it's loading. Okay, here we go. So, hi everyone. Thank you all for joining us. My name is Maya Korbik, and I'm the founder of the Nari Financial Education Academy, whose mission is to provide fun, educational, and interactive tools for parents and caregivers to help them teach kids financial literacy. Today, my guest is JJ Wenrich, who is the author of the book, Teaching Kids to Buy Stocks, Stories and Lessons for Grown-ups. So I have the book here. I read it and I thought it was an amazing book. I thought it was very straight to the point, not overly complex. I think a lot of parents will find it very, very helpful. And without further ado, welcome, JJ.
Well, thank you, Maya. I appreciate you having me on, and I appreciate you, buying the book and reading the book, and for your kind words.
Great. So I know that a lot of people are excited about this interview that we're having, and I'd like to sort of start by saying that when I bought this book, I thought that this book was a book for kids. And I guess I failed to read the subtitle that says Stories and Lessons for Grown-ups. So once I read that, I actually realized, okay, this is meant for parents. So was the intent behind the book to help educate parents how to teach kids investing, even if they don't know anything about investing?
Yeah, that was the goal. The goal was to teach really anybody who wanted to learn the basics, that thought, all right, this is something I wished I'd have learned along the way, but didn't want to have to do it through a traditional finance type book that was going to be dry and academic, and wanted it to be something that read more like a book someone would read for fun, that didn't feel like work, where you're just, all right, learning it as if I'm telling you the stories, telling you the lessons along the way. So that was the goal, was to write something that would be able to work its way to helping kids, that it would give parents the tools to feel like they could have these conversations with their kids, if they even if they didn't come from a finance background, but also knowing that there would be folks that didn't have kids that might read the book, and this would be their entrance into what can be a complex topic. Try to do it in a way that's not so intimidating and not so complex.
So it's actually interesting, because I know a lot of parents that, they're doctors, or they actually ended up in a science field, that they never took any business courses. So investing is very intimidating for them. And when I speak with them, they say they want to teach their kids investing, but they have this fear. They don't know, where to begin. So how can they teach something like this? I mean, obviously your book is very helpful. I think it's kind of, as I said before we actually started the meeting, I felt like it's investing 101. But what can these parents do to combat their fear?
Yeah, no, I think that's the perfect question. I think that, first of all, it's okay to have that fear. It's okay to not feel equipped with that, because you're perfectly normal. That's just how I'd say most parents are. And so I think that to kind of bridge that gap, I say to start talking about what you do know. And really, the lessons on investing, those are really the second set of lessons or third set of lessons you need when it comes to talking to your kids about money. And it really starts with all the stuff that you do with your program, and just talking about basic financial literacy first. Because whether you're a grown-up or a kid, if you haven't saved up cash first, if you haven't learned those skills and those disciplines to be able to save, it doesn't do you any good to know how to invest, because you're not going to have enough of a cushion to allow you to weather the ups and downs of investing. So the way I tell parents to start to have the conversations with their kids is one starts with money. Starts with just having open dialogue about money within the house and talking about the psychology behind saving versus spending, because the math is easy. It's the psychology that makes it give up instant gratification to save. And then when it comes to kind of going to that next step of actually talking about investing and talking about stocks and the markets, I say that's more of a conversation about business. And that's just helping your kids be aware of what business is, of what businesses they interact with and what's around them. And really, it doesn't have to be anything formal. It's more of just as you're going about your everyday lives, when you're in the grocery store, when you're in line at a restaurant or whatever it may be, just talk about that business that you're at. If it's a small business, talk about it. Oh, this is so and so's business. This is what they're trying to do. Or if it's something big and big brand name, mainstream, then talk about the fact that these are businesses that are so big that they're almost everywhere. And eventually that helps you just to get them to start to see the world through the eyes that these are, we don't just go pick up our groceries there. There's someone that's actually going through a lot of work to make those groceries at that store, and they're trying to make money by doing it, and helping them have that awareness, because eventually you can bridge from talking about businesses to, some of these companies are so big that anybody can become an owner. And so it's more of an evolution. It's not just a set, here, do this, then do that. I see it as just an evolution in how we interact with our kids on a day-to-day basis, just the same as it is when you're starting to teach them the basics of not spending every piece of money that they get.
Right. And I like that you're suggesting, this is something that we can do throughout each day, if whatever company that we're interacting with or using their services, we can bring that up and talk to our kids about the business and who stands behind that company, what is it that they do and how they make their money. And I'm a big a supporter of actually really teaching our children about money and using everyday examples. I'm not really big on like sitting down and learning from textbook. It's more like, okay, this is what's happening right now. Let's talk about it. This should not be taboo money should not be taboo. So let's discuss it. So it's really, and I really appreciate that you sort of broke it into some basic steps. It's like, okay, let's talk about money. Let's talk about saving money, delayed gratification, and then investing. But when it comes to investing, should the kids be investing into stocks, or would it be better that they start off with something different? What would be the first step, I guess, into investing, like when they're actually investing their money?
Yeah, no, really, really good question. And there's even some debate out there over how to actually kind of work your kids through that process. And so, I mean,
JJ, I'm so sorry. I actually just got a note saying that they don't hear you. Is it your mic? Hang on. Sorry.
I pulled my mic, so I'll use the internal mic. Is that any better?
Let me find out. Sorry. Just I am going to maybe just a second. I'm just gonna see. Technology. Let's find out. Okay, you know what? We can talk if there. I'll probably receive some feedback if they can't hear you. No, I think it's a. Oh, I think they're responding.
They may not know if they can hear me now.
Yeah. Yeah, they're saying they can't hear you, but I hear you just fine. So that's really interesting.
So I did disconnect my mic. So hopefully if it was not picking up, that helped.
They hear me, but apparently they don't hear you, which is, yeah. I hear you just fine. Wonder how many people cannot hear you, or if this is just, somebody's telling me to take out my headphones. So I'm just gonna do that. Okay,
Testing.
let's see.
Can you hear us now?
Okay, can you hear me okay, JJ?
I can hear you, yeah.
Oh, I can't hear you now. This is interesting. I am not sure what is happening.
At least they know it's live. Can't hear me.
Sorry, let's see here. See, I can hear you just fine. I'm not sure if we should end the session and start again, or if you're watching right now, can you please let me know if you can hear JJ? I just need to know how many people cannot hear him. Not sure why that is. Technical difficulties. You know what? I think maybe what I think we should do is continue, and then I can just post this video on Facebook and YouTube, and then everybody can watch it at that point.
Okay, yeah.
Are you okay with that?
I'm fine with that, yeah.
Okay, I'm not sure. I can't figure it out. I hear you just fine, and you hear me. Other people are not responding, so I'm assuming they can hear well. So let's just go on.
Okay, yeah.
Is that okay? All right.
Yeah.
So we were talking about investing and whether or not how the children should start investing.
Yeah, we're talking about, do you buy stocks? Do you buy something else? And so, I mean, and there is some debate on, should you let kids pick their own stocks and their own investments? And so here's my advice is, first of all, help them learn to save cash first, because you shouldn't start investing until you have a good cash cushion, because you're going to need to leave that money alone. You're not going to want to be having to get to anything that you're going to put into investments. And so the bulk of the money that you're saving for their future should probably go into something that's not just one stock. It should be in some sort of fund that tracks the broad market or the broad indexes, I would say. So if you're building up their college fund or whatever it may be, I think that it makes sense for that to go into more of a diversified portfolio. But that being said, I think that there's a lot of benefit in letting them peel off some smaller amounts that either you've given them the money for or that they've used their own money for, to buy some individual companies, one or two or more, that they know about, that they have some sort of interaction with or knowledge of, because and it doesn't have to be, we're going to take $5,000 and let the child pick a stock. You can buy these days fractional shares, and so you can just put $50 or $100 into something, and if it turns out to be a horrible investment, we've probably all spent $100 on something stupid before in our lives, and let it be that type of a lesson. But that way they get into the idea that, all right, I'm picking a business. I'm going to be an owner in this business. And so I want to think about, what business do I want to be an owner in? Because if you're an investment analyst professionally, that's really what you're looking for. You're looking for businesses that you want to own because there's something happening there that's going to make it worth more down the road than it is today. And so if you can help kids start to just think that way, that it's not this one big thing, the stock market, it's a market of stocks. It's a market, and each stock is a different company with a different story, with different people behind it that are just trying to build a business. And if you can help kids understand that, even if it's not the bulk of what they're putting away, maybe they put most of their money away into a mutual fund or an index. then you peel off, $100 here or there that they actually have control of and they get to make the decision on. I just think it helps them learn the full scope of lessons, and honestly, it'll probably keep them more engaged. I find this with grown-ups. They'll have their portfolio, maybe 90% of it is in mutual funds, and they couldn't tell you what any one of those funds are. But you give them 5 individual stocks and it's on their iPhone, they're checking it all the time. And it might be a small portion of their overall net worth, but they're more engaged with that portion because it feels a little more tangible if you're looking at, all right, what's my Apple stock at versus, oh, what's my S&P 500 index fund at?
Right. And I actually really enjoy like the stories at the beginning of your children investing in like Apple stock and Disney and PetSmart. And those are the companies that we know. And for children, those are the companies they can actually understand what they do and how they make money. So I think, as you said, like investing in that particular stock, like makes probably most of us check up on that stock all the time or check up on that company all the time. And by the way, I really, really enjoyed reading about the Labor Day competition that you have with your children. I don't know if you want to tell us a little bit about it.
Yeah, absolutely. I mean, with anything with kids, you want to try to make it fun and engaging with them. And my kids have turned to teenagers now, so it's for those that don't have teenagers, it gets harder to keep them engaged and interested in what we're talking about. But when they were younger, it was certainly easier. But what we did one weekend when they were younger was we decided to have a contest within the family. And so we had each of the kids pick 2 companies that we would just do a fake money contest. So what we did is everybody picked 2 stocks and we said, all right, we're going to check on these a year later. And whoever had the best performance in this simulated portfolio, then they'll be the winner. I went and got online and found a place to make little trophies for the winner. And that's what we did every year for several years. And then we got our timing off a little bit. So now we're on a calendar year basis because we were running it Labor Day to Labor Day, but now we're running it on a calendar year basis. But that was over a year's time where the winner, they would have a little bit of interest in looking at what those 2 companies had done. And give them a little bit of insight into things without risking anything. A year is a long time. I might suggest for some, especially with younger kids, it might be easier to have some sort of contest on a monthly, quarterly, whatever basis. We did a year just because we did, but as you know, a year is a long time in a kid's life, so sometimes it's better to do that on a more frequent basis. And you're not necessarily wanting to the kids to think about things on a short-term basis. You still want to have them, I'd say, keep a long-term mindset. Any investor, you want to have a long-term mindset. And so just understanding that's part of it, because you don't want it's not a situation where you're going to, I think, teach your kids to trade in and out of stocks and anything like that. I mean, that's hard to teach adults that. That's almost a fool's game for adults. It's certainly going to be for kids. But just having that contest helped us keep them involved and interested. And with siblings, bragging rights can really go a long ways to keep them engaged.
Right. Yeah. And I agree. I think with kids, and this is what I tell parents when during my workshops, I think I find it very helpful when, we talk about money more frequently, because that concept sticks with them. When they're older, it's different. Yes, you can do it like, you don't need to do it as frequently, but when they're little, it's, I think, more beneficial if, we talk about certain concepts in shorter time periods. So I can see why, for example, having these competitions maybe every 3 months or every 4 months would benefit. So actually, speaking of younger kids, how old should kids be to start learning how to invest?
Yeah, no, I think that's another good question, and almost one that I would be curious your thoughts as well, given your experience doing what you do with Denari. I mean, I think that there is no too early to start understanding the concepts behind money. But I'd be interested to hear kind of what you think the right time frame is. when it comes to actually talking about investing, it really depends on the kids. It depends on whether they understand, what investing even means as a concept. So if they understand, the money concepts as you've started to talk to them about things, and you feel like they're getting it, you can explain to them what a loan is, that someone loans money and then pays it back, and they pay back a little bit more than they borrowed. If they're learning that much, then you start talking about businesses. And once you feel like, all right, they're understanding this, then you bridge it to, all right, some of these businesses are so big that anybody can be an owner in them.
Yeah.
And you kind of just follow that path. So for some kids, I mean, that might be when they're 5 or 6, and then there might be others where they may not quite understand that when they're a little bit older than that. But I think by the time they're 7 and 8 years old, they can probably understand all those concepts just fine. And I just feel like that's kind of the order you go, is you go from talking about businesses to then talking about stocks. And I think that's the part that people tend to forget when you're talking about the stock market, is it really is just a bunch of different businesses all together. And then, you see the prices bouncing around all the time. Well, that's because, there's uncertainty, and you never know what winds are blowing those prices around. But in the end, if the business environment is getting better, then more businesses are going to be worth more. And that's why the markets move up and down. And with kids, it's a matter of kind of going one step at a time, where we go from businesses to these are stocks. And then it's easier to understand, all right, the indexes and the markets, that, all right, there's the Canadian stock index, there's the S&P 500 in the US. It's easier to understand what an index is once each one of these individual things inside just represents a company.
Right. Yeah. I did find that, I did teach my kids, or I started teaching my kids about investing earlier than what I do actually in my workshops. But I do have a funny story to share. When I was in grade 1, I was teaching grade 1. This is several years ago. And, I told them there are, 4 things we can do with our money. We can spend it, we can save it, we can donate it, we can invest it. And one kid in grade 1 said to me, he's like, well, what's investing? And I said, well, you know what? We're not going to learn about that now, but that's something you're going to learn later. He said, what is it? What is it? I'm like, well, that's when you use your money to make more money. And he looked at me and he goes, like, is it gambling? And I'm like, well, I guess it could be gambling if you don't know what you're doing, right?
Yeah.
But it was really cute because I think kids really want to learn. And as long as we don't make it complicated and we talk in their terms. And I really like how you're talking about it. It's like, let's not talk about stocks. Let's talk about companies. And especially if it's a company that they can understand, that they're interested to learn more about, then they can understand that they can have a little piece of that company. They can be a part owner, which is really, really exciting. Like, to be when I was a kid, nobody taught me when I was a kid about investing, but if I could have been a part owner of Disney, that would have been so huge for me.
Yep.
And I think for me, when I teach investing, and I don't really go into too many details, because some of these workshops are very general, and then I have specialized workshops, but I like to use a lot of visual examples. And so I will visually show the shares of the company and visually distribute the shares amongst the kids so that they understand what it means to own 50% of the company, and what it means to own 10%, and what it means if you have more than 50%, so that you actually can decide what happens with that company. Yep. So it's really exciting for them. But I have another question for you. So when children are investing money, would you recommend that they invest their money, or would you recommend that they sort of watch their parents and what the parents are doing with their money? Because I know when it comes to allowance, for example, and I know allowance is not investing, but it's sort of kind of like all related. I always strongly suggest that parents give allowance regardless of the way they're going to do it, the method, whether it's based on chores or no chores or whatever, because I think that kids treat their own money differently and they learn better when it's their own money. What are your thoughts on kids investing their money versus parents' money?
Yeah, I think that kids are going to learn more. I think you're right on. The lessons will be much more easily retained and learned with their own money, and that's why it doesn't have to be a lot. If it's like you said, you had one of your children that was a little more risk averse, and so they weren't as interested in taking on the risk. There's an old saying within the investment world of paper investing is not investing, that you can't learn from just doing it on paper, that you have to feel some of that pain. And while it's not completely true, because you can learn a lot from just simulating, you can learn a lot from running tests and that sort of thing, it's never the same as the real thing. And just like the pilot in the simulator can learn what they're supposed to do, it feels differently when you're plummeting towards Earth, So
Yeah.
I feel that what I've seen with my kids and just knowing, helping, so many investors over the course of my career, I think that it really will be a more, a deeper felt lesson if they feel the pain of losing their own money versus watching mom and dad lose their money. Just not going to have the same emotional connection.
No.
And the good side as well, feeling that the if you made money, feeling the good that comes from that, but also just the path. Like they say, the journey is often the reward. Seeing themselves, all right, I lost money, but then I didn't do anything. I left it alone. I just kind of kept going forward, maybe kept saving more, and then seeing things recover and go up for them. I think it's good for them to feel the whole cycle of emotions that come from it, because just like learning to save is more of a lesson on psychology than it is on math. Same thing with investing. I've seen so many times, I've seen it within myself where I've known what to do, but my own emotions get in the way of me doing what I'm supposed to do. Because when it's March of 2020 and all of your stocks are free falling, and that over the long term, the right thing to do is probably nothing, it's hard to watch things go down another 3% tomorrow or another 3% tomorrow. That's really hard to do. And, I don't know that you learn that lesson as well unless you do it yourself. And I think that kids need their own money. I agree with you 100%.
Yeah.
That allowance is incredibly important for them you can't expect kids to know how to deal with money if they don't have it, and that includes making their own mistakes. Someone else I talk to a lot that does similar to what you do, that's one of her main things is don't give them money and then tell them how to spend it. She says you got to give it to them and let them.
Yeah, I agree 100%. And that is, I think, one of the hardest things for parents to do. I always tell parents, the same thing, give them the money and just back off. But I know that I've even made those mistakes of slowly kind of, suggesting maybe you shouldn't do that or you shouldn't buy that. But then, I think about it and as much as I think it's silly to spend money on, let's say, video games, my son probably thinks it's absolutely ridiculous to spend money on makeup. Right. So it's the same kind of thing. Right. So I think, and I have to say, I have experienced those situations where my kids have spent money on something that didn't really work out well for them. And we had conversations afterwards where, we sort of recapped the situation and we talked about it. And what did we learn from this? The most important thing is to learn, right? Even if mistakes happen or we lose money or whatever, what have we learned from it? And I'm assuming it would be the same thing with investing.
Yep, absolutely. Yeah.
Do you have those conversations with your kids?
Yeah, we do. We probably have more of the conversations around what you're talking about is, are video games a good use of money, or is, my teenage daughter that thinks that money's better spent on fingernails and makeup and things. So we do. And then we've had them about investing. Less than I would have thought on the investing side, because they seem to be just accepting of the fact that, oh, well, things are going to go up and down, and I just gotta, I just need to keep buying shares. I feel like they've handled that psychology better than most grown-ups that I've ever worked with, because they just seem disconnected from that ups and downs of it.
Do you think it's because they don't watch as many news, or why do you think that is?
I think that's a big part of it, is they're not paying that close of attention. Something I told my mom 20 years ago is, stop opening your statements and you'll be a better investor. And then I get home and I see literally she has 12 monthly statements, stacked up and unopened, and she's done pretty well because of that. I think that's a big part of it, is just not being so influenced by the ups and downs.
Yeah, like even in your book, and I've seen this before in some other investment books, they show the graph, I think from like 1920s or something. It just like, it goes up and down, but eventually it does go up. So if we can just ride it out and, not get emotional about investing, as you said, like just stop opening those statements and like stay in the market, and eventually it's going to go up.
Yep.
Right. For most stocks. I'm sure there are some that may go bankrupt or whatever, but majority of the companies, I guess they do well over time.
Yeah. And you just have to give yourself that time. And that's why I feel like, and this is lessons for adults as much as any kid, is you have to have that cash cushion first, because, if this is, your mortgage payment, then you're not going to be emotionally equipped to watch that thing fluctuate. You shouldn't. You should have that emergency fund set aside, so that you're like, oh, well, this is money that I'm probably not touching for 5 years, 10 years anyway. It's easier to leave that alone than money that you're going to need. And that's why, the first step has to be cash. You have to have those short-term emergency funds set aside first before you start to invest.
Would you, I know that some people watching this may not necessarily have the cash to invest. So obviously the first step is, as you said, save the cash, have the emergency fund, then I guess save some more money so that you can invest it. Mm-hmm. And so for those who are not there yet, would, I guess, simulating the market, or like simulating the investment, simulating investing, would that be a solution to sort of start learning about investing until they can safely jump into the market?
I think so. I think it helps you gain experience, even if it's not exactly the same. Start, if you're still building up your emergency reserves, or you're paying off debt, or whatever it may be that you need to focus on, but you still feel like you want to increase your knowledge, I think that can be a really good tool. That's something that I've always done just because of an interest level, and continue to simulate stuff, even just as a way to track things. So I think that's a good, healthy habit. The other thing I would just add is, you don't have to save up a big amount and then start. In fact, that's not how most people build up a good investment portfolio. Most people build an investment portfolio on $50 a month, then $100 a month, then $200 a month. And maybe you even start that while you're building up your cash reserve, that, all right, I feel like I've got some money set aside. Maybe I don't have 6 full months of expenses set aside, but I've got a couple 3 months set aside. Now I can start to put $50 a month into some sort of longer term thing, and still going to keep building up my cash, but just get in the habit of putting a little bit away, because I know that most of the, if you look at the people that are in their 50s and 60s that have built up really nice retirement plans, which is where a lot of the investment dollars in North America sits, is in retirement accounts. They've done it with the 401k plan. They've done it with some sort of company sponsored plan where they were given a match on what they did, and it may have started with 50 or 100 or 200 a month, but you do that for 20 years and you get the markets working in your favor as well, and suddenly you wake up one day and you've got a pretty nice nest egg set aside.
Right.
Like you have to wait until you have a big pile of money, because you may never have a big pile of money unless you start, stacking dimes, stacking dollars.
Right. And I think it's nice to get into that habit of putting some money aside. As you said, maybe starting with 50 every month. And then if people get a raise, then maybe moving that up to 100. And it's just one of those things where, if it automatically comes up your paycheck, you don't even feel it anymore. You're not thinking about it, that, you're missing it. I know, for example, for me, when my daughter was in kindergarten, and we did a private school kindergarten, and I think it was like $580 a month or something like that. But it was when that ended, I was like, you know what? I'm just going to make sure that money goes straight into, we call them our RSPs here instead of 401k. And so it was just like, I just changed that withdrawal to go straight into my investment portfolio. And it's been going there for years now. And it's just one of those things, like I didn't miss it before, I don't miss it now. That's what happens.
Yep.
Yeah. And so another question for you is, how can parents keep investing fun and not boring? I mean, I know in your book you mentioned, that you watch Shark Tank with your kids, and there's that Labor Day competition that you guys did. Like, what else do you do to make it fun?
Yeah, no, I'm glad you brought up Shark Tank, because I think that's so much of what I like to talk about is encapsulated in that show, because you see the bidding process for companies right there in front of you, and all the questions that go back and forth. I think that's real life business interaction that they're seeing. Plus, it's fun to see these ideas that people have as entrepreneurs for their companies. So I think that's a great way. I like games. There's a game that it's not a mainstream game. It's made by an independent game maker, but it's called Investors Showdown.
Oh, I'm gonna write that one down.
Yeah, Investors Showdown it's kind of like a Monopoly, only it doesn't take 30 hours to play. You can play it in about 20 minutes.
Oh, nice.
Yeah, but you're buying properties, and it actually does use terminology for stocks and bonds and real estate, and you're trying to build a portfolio that generates a certain amount of income. But then, market crashes will happen, which might wipe you out of some of it. So I think it does a good job of, helping with the terminology, helping understand some of the ins and outs, but it's an easy game to play. It doesn't take a lot to learn. And, what I've learned with my kids is that better be done in an hour or less. Otherwise they're moving on to something else. And so I think it takes maybe 20, 30 minutes to play a full game.
Yeah. Have you ever played Cash Flow Quadrant, by the game made by Robert Kiyosaki? It's based on this Rich Dad Poor Dad.
I haven't. I want to. And there's even someone else I saw that she's hosting a cash flow live that I want to maybe get involved with. But it looks like that'd be a perfect game for teaching this stuff.
You know what? It really is great. So my daughter she's 11. So we must have played it for the first time maybe 2 years ago. Maybe she was 8 or 9. And it was one of those games where we started playing it, and then we would pause it for a moment just to explain to the kids, okay, this is what's going on. You have this stock. This is how much it's worth. They give you a range, like how much the stock can fluctuate in case, like if you want to buy it. And it was really great because it was all about what it is that you do, how much money you put aside, how much money are you investing so that you can get out of the rat race. And I was honestly shocked. My kids understood I would say 20 minutes into the game, they actually understood what was going on. And it was actually really funny because I think you can also have children in the game, and it's random. I think I can't remember how you get children, but anyways, like draw a card or something. And it was funny because my daughter had none and my son had 3 or something. And he was like, please, no more kids. I don't want kids, because his expenses kept on going up every time he had a child. And it was really funny. And then they turned to me and they're like, are we that expensive? And I'm like, well, having kids is expensive. But it's a great game. I highly recommend it. And I'm kind of curious, but I'll ask you after this interview, who is doing that, I guess, online game, because I would really like to like look into that and find out more about it. Another question for you is that what broker do you use to invest?
Yep. So yeah, a lot of it will depend on whether or not you're getting advice from somebody. So if you're just doing it on your own, almost any broker will do. Personally, we use just a online broker for our stuff, but that's because I'm running all of it on my own. If you're getting advice from somebody, then you may need to go through them. And if you are getting advice, just make sure you ask all the ways, just what all the costs are, what all the different fees, that sort of thing are. But if you're doing it on your own, I'd say any of the big mainstream brokerage houses are going to be fine, whether it be like a Schwab or TD or a Fidelity. I'm not sure if there's different ones available in Canada. But the one caveat I'll add is if you're going to be using smaller dollar amounts, so if you are going to want to invest $25, $50, $100, then you may need to look at one of the ones that offers fractional shares, because not all brokerages at this point offer fractional shares. I believe Robinhood does. Stockpile is one that you had mentioned before, where you can get fractional shares. And so you may need to go to one of those to be able to get so that you're not having to save up, $3,000 to buy one share of Amazon. You can put $50 in Amazon. But may or may not get the same level of customer service from a Robinhood that you would from a Schwab or Fidelity. But that's kind of the plus and minus of it. But really, most of them are going to be about the same for what you're doing with yourself and with your kids. The only difference would be is if you are going through someone that you're getting advice through, then they typically they'll manage it on whatever they clear through.
I'm actually glad that you mentioned Robinhood, because I was looking into Stockpile and Schwab, and I don't think we have them in Canada. And I know that some people watching this are from US, but I was looking for somebody or a broker in Canada that actually sells fractions of shares. So I think we have Robinhood. So that's really great news, because I think for kids, especially if they want to invest in some of these companies that they know, like Google or Netflix or Disney, those are expensive companies to invest in. So to get them started, I think, I don't know what your opinion is, and I'm curious about that, but I personally think investing in fractions of shares for kids is better than not investing at all.
Yep.
Yeah.
I have no qualms with the fractional shares. If there's any reason to have qualms, then someone needs to point them out to me, but I just see no downside in it. And my kids couldn't swing enough allowance to buy $3,000 worth of Amazon. So I think that the stockpiles and Robinhoods make sense for that.
Right. And speaking of your kids, like what investment related concepts do you hope to teach them in the future as they get older?
Yeah, I was kind of hoping that one of them would really take to it more than they have, and maybe kind of go this direction as a career. But so far, I mean, they're 13, 14, and 15, so they're a lot to be determined. But I would love for them to just continue to build on what they've already learned and start to learn a little bit more about some of the numbers behind each individual company. I don't know that they'll get to that point, because I think they'd almost need to take an interest level as if they were going to go into it as a career to go that far. But that's kind of what I was hoping would come next, was that they would want to go a little bit deeper into the analysis side of each company. But it hasn't happened yet. And as they become teenagers, my ability to influence what they do to spend their time becomes less and less. So I haven't fought too hard for that. But that's what I would want them to do, is just to study a little bit deeper into the companies and just into the markets in general.
Right. I think it's important to be able to understand financial statements and ratios. And you do a wonderful job explaining the ratios and in your book. And like you're not giving too much information. You're just giving just enough, perfect amount for people to be able to start investing and making investment decisions, which is wonderful. And I really think that that's definitely a first step. And then and to be honest, I think if I was not a CPA, I wouldn't have known any of this stuff. I think at least our education system in Canada, and the funny thing is, like, if you are like, so when I was in high school, I thought I was going to go into sciences, and I did my maths and my sciences, and then just last minute changed my mind, ended up in business. But because I took all sciences, I had absolutely no idea. I didn't know anything about money. And I definitely did not know anything about financial statements and ratios. And I mean, now, of course, yeah, I can look at financial statements and I can analyze them, and that comes easy to me. But I can understand how a lot of people feel some sort of apprehension, and they just, it's overwhelming. So, do you show financial statements to your kids of these companies that they invest in, or like, do you show them other ratios?
I had hoped to get to that point, and they never really went with me that far. They got about as far as the book went, and maybe not even quite that deep. Because one thing I tried to do in the book is give enough depth that someone really can feel like they understand some of the numbers that drive what happens to a stock price up and down. But I don't know that with the kids we got any further than kind of going through earnings and the price to earnings ratio, which when you hear that, I mean, if you've never heard those terms before, that can be intimidating in itself. And the goal in the book was at least to get readers that far through the analysis process, but do it in a way that they didn't feel like they were, memorizing ratios and that sort of thing. So in the book, I try to walk you through comparing a lemonade stand to Apple Computer and going through the numbers for your lemonade stand with you and a friend versus what Apple, their numbers have been. Because yeah, I mean, if you haven't had that before, it can be quite intimidating. And that was the goal of the book, is to take that intimidation factor out and try to do it through stories. But with my kids, we got to the point of thinking about it more conceptually of, all right, what's going to drive this business to be bigger next year? Do they have a new product coming out? Is it a growing market? Like, is it video game related? So esports are going to be growing. Is it that sort of thing? And then maybe pulling up a chart of their earnings over time. And that's about as far as I got in.
But it sounds like critical thinking. It sounds like, okay, this is the environment. This is where we're trying to predict the future. And you're trying to teach them to put all that information together that they know about the company, and then what's their prediction. And then, like, as you said, like the basics that you taught them, which you have so wonderfully explained in this book, that I really think, and this is, I'm talking to everybody who's watching this video. I know that there's so many people, as soon as I start talking numbers, they're just like, okay, I'm gone. I'm out of here. This book, if you get it, it is absolutely amazing. Everything is explained so clearly. There are some numbers in it, but not too many. It's very easy to understand. And if you're serious about wanting to learn about investing, this is definitely a great book to start. So, and the funny thing is, I don't know, I didn't mention this to you, but on my Facebook member page, I'm doing a giveaway. I'm going to give away one of your books. And I actually asked people just to contribute to or participate in the giveaway. And one of the questions was, if there was a stock that they wish they, bought, but they didn't, what's their regret? Like, which stock would be their regret? So I don't know if you have a stock like that you would like to share.
I have so many of those. I'd say my biggest regret is Well, here, I'll give you a recent one. I thought I was pretty clever on Zoom video. We're using Zoom video right now. Um, I bought it last year, and beginning of this year, I thought, oh man, I made pretty good money on this. So I decided to sell it at the beginning of the year at, I think I bought it at 60 and sold it at 120 and thought, hey man, I doubled my money. I'm a genius. And I think that stock is, gosh, is it over 300 now? So
Wow.
that's,
Wow. Yeah.
I'll give you one of the more recent ones.
It's actually funny. I mean, they always say hindsight is 2020, but sometimes even, we talked about simulators and like simulating investing. And I sort of dated myself on that Facebook post, that Facebook giveaway post, because I remember I was in university and eBay was just starting out. And I know eBay is not a hot stock right now, but back then, I remember we had to do some sort of analysis, and I had no money. I was a poor university student. And I remember I did all this analysis. I was like, wow, this is a good stock. And sure enough, in the first couple of years, it actually, like, I could have doubled my money, but I didn't invest in it. And I remember a couple of years down the road, I was checking the stock price, and it doubled from where it was. And I was like, oh, I should have invested in that, but it was, different times, different circumstances. And another one for me, I mean, I do hold a little bit of Bitcoin right now, but I know, was it when I first started doing these workshops, I had a parent come to me after one of the workshops, and this dad said to me, he's like, yeah, so what do you think about Bitcoin? I'm like, what? I'm like, what are you talking about? And so anyways, I did some research. I'm like, oh, this is not going anywhere. And, had I invested even a tiny little bit of money, that would have been so big now, right? But it's I guess it's a learning experience, right? To just really kind of think about these decisions. And but at the same time, I think it's also being okay with this, being okay not making that money, and there will be other opportunities, I guess.
Yeah. I mean, that'll drive you crazy because there'll always be something like that, and you have to be careful not to constantly second guess yourself because of things like that. And the other way I'd also say that is also give yourself some credit that you might not be as late as you think on something. There's this tendency to think, oh, well, if I'm noticing it, it's already happened. A lot of times these trends last a lot longer than you ever would think. I mean, you could have said, oh gosh, I've missed Amazon. You could have thought that 10 years ago.
Right.
And it's just kept going. Bitcoin would be another one of those I have, woulda, coulda, shoulda, because when I actually opened up an account to buy Bitcoin it was early stages of that. And I never funded it. I never put the money in it. I got freaked out and they never did. So, but there's so many of those.
Right. I don't know. I mean, like, it's really interesting what you said. Like, sometimes it's never too late, because after reading your book, and I started thinking about some stocks, and I don't, I mean, this is not advice, I'm not going to speculate, but I know based on my work environment and what I do, there are some stocks that I'm thinking, oh my gosh, they're so expensive now, but I do see them based on my research going even further. So I think I had this mentality of like, oh, it's too late to invest in this, the time has passed. But then after reading your book, I was like, well, wait a second, I don't think so. I think this company is still going to do really, really well in the future. And it's not too late to invest. So I think I might be doing, and honestly, you inspired me. After reading this, I was like, I need to do some more investing. And I do use, I do have a portfolio where I pick some stocks, and those are mine, but I also use a financial advisor, just because I don't have much time to constantly dedicate to markets and really understand everything that's going on. But after reading this, I think I have this desire. I actually want to invest more myself than rely on other people. So thank you for that.
Well, good. Hopefully you're not hating me for that in 2 years.
No. Yeah. Anyway, so I just want to ask if you can just let us all know where people can find you, and where they can buy your book, and anything else you want us to know before we end this meeting.
Yeah, no, I appreciate you having me on so much. So my website is teachingkidstobuystocks.com, and you'll find links to everything there, but you can buy the book on Amazon, on barnesandnoble.com. I think that almost everywhere that you can buy books online, you can find the book. We have links directly there on the website. And then we have social media as well. I think you and I met initially through Instagram, and then found your Facebook group as well. So we're on Instagram, Facebook, Twitter, and LinkedIn. If there's a social media platform, almost all of them, I think we've covered them, except for TikTok. I'm too old for TikTok. I can't figure it out.
Yeah, I'm too old for TikTok too. I think it's all about videos and singing and dancing, and I don't know how that would how that would work for me.
Yeah, I'm not good at either one of those, so it's probably not a good combo.
Yeah, I figured I'll stay away from that one for now. Anyways, thank you so much for joining us tonight. I really appreciate all your insight and wisdom about investing, and I look forward to rereading the book, and I also look forward to the end of our giveaway to give one of these books to our Facebook members. And I hope, we can do this again sometime in the future. Thank you.
Thank you so much. I really appreciate it, Maya.
Okay. Have a good evening. Bye.
You too.